Okay, right now, I'm going to show you guys one indicator that will transform your bank nifty trading. Go to the Indicators tab. Type in Regression Slope Oscillator by Big Balooza. Once you click it, you'll see the candle's colors change. It goes from aqua, blue, to orange. Basically, when a market is in a bullish trend, the candles will be in blue. And when there's a bearish trend, it will turn into orange. In this indicator, the central dotted line is called the zero line. Whenever the market is above the zero line, the market is bullish. Whenever the market is below the central line, the market is bearish. Before we get started, there's a general rule. Whenever the market is sideways, no indicator will work. Remember this rule. So, never ever trust an indicator when a market is sideways. Now, how to know when the market is sideways? For that, we will add another indicator. Go to the Indicators tab again, type Trend Alert. It is done by RST3612. Here, you see it's either green, red, or black. Whenever the trend alert shows green, we will only look for buying or long opportunities. And whenever the trend alert shows red, we'll only be looking for selling opportunities. Black is again a no-trade zone or a high-risk zone. High risk because you can try to get the reversal entries, but again, these are very risky. So, I would always go only for the red and green zones. Remember, green is for buying opportunities and red is for selling opportunities. So how do we trade this now? Let's try to understand the setup with proper examples. First step is to look at the trend alert and identify the color. It has turned red, indicating a downtrend. We will only be looking at selling opportunities. Now, I know the market is bearish. Next, we will look at the Regression Slope Oscillator. In the Regression Slope Oscillator, there are two lines. First is the oscillator line, which is the colored line, and then there's a signal line, which is the white line. As you can see, the white line always forms a crossover. You must have gone through a lot of indicator setups where they tell you to take trades based on a crossover. But we will try to avoid this because it goes against the trend, right? First, it is a bullish trend, and then you say it's going bearish, but there is no confirmation. Therefore, we will only see confirmation once the trend is established. Now the next step is to confirm the trend in the Regression Slope Oscillator. If it is above the central line, we will look to go long, but not at that time. If it is below the central line, we will look to go short. Once both indicators confirm the same bullish or bearish, that is where we will look for our entry. Finally, once the oscillator line crosses the signal line for the second time, that's where we will take that short position. So here will be our first entry. Here we'll take a short position. Just put a stop loss just above the swing low, or if you want a very small stop loss, you can put it just above that candle. After a few candles, you can see that the risk to reward is 2.5. And now we will go back and look for more opportunities. Now that the market is red, we will not be looking for long trades. We'll be looking at selling trades here again. Since the market was already in a bear trend, we could be a bit more aggressive and take the zero line crossover trade itself. Remember, this is a risky trade and can go wrong. The risk was worth it, and you can see you got a nice profit of 2.5 RR again. Okay, and if you didn't take this trade because, again, this is a very aggressive trade, you can wait for the market to consolidate a bit. The oscillator line again crosses the signal line, so you can again take a short position here. Put a small stop loss above the swing high. Then you can see the market is going down. You can avoid this trade because this was at around 2:45 p.m. when the market closes. So then we can go again. The trend alert is still in the red. Here, the oscillator line again crosses the signal line. You can go short again. Put a stop loss just above your swing high. As you can see, a major profit of 2.5 again. Okay, now you can see the trend alert has turned black. It's no longer bearish. Right now, it's become choppy. So this is giving me an early signal that the downtrend has run its course. Now, the market has gone up again. You can take this aggressive trade. For high-risk takers, you can take a long position as it turns blue or once the crossover is there. But again, we'd like to avoid it because it's a bit too early, especially given its downtrend. It could go up and then fall down again. But after that day, you can see that the market has gone up and consolidated. Now the trend alert is bullish. As you can see, The trend alert has indeed turned bullish. It is now green. So now we will wait for the second crossover of the oscillator line. Here, we can take a long position. You put a small stop loss below the swing low, and then you can get a profit of around 2.25 RR. Not a lot, but yeah. And then the market has fallen. Trend alert has confirmed with a green to black move. So we would not be taking or finding any more trades. Because, again, this market is choppy, and you can clearly see it has been in a consolidation. And the trend alert has turned green again. So now the market is bullish. You got an entry here. Take a long trade. Put a stop loss below the swing low, and you can see the day ended at the same price, so you didn't really make any money here. But again, no loss. Now, the trend alert has turned black. So we won't be taking any trades. Yeah, this is why I told you, right? The risky trade. See here, you had a crossover. Thinking that, okay, the market will continue its trend, but then it did not go at all. The trend alert has completely changed to red. You get a signal right over here. You have a red candle. The oscillator is below the zero line, goes up in the oscillator line, and again crosses the same line. You take a short position. You can put a stop loss to swing high. You can see the day ended with a profit of 2.25 RR. Okay, so that's it. And that was basically the backtesting of this setup. It has given me a lot of money. Again, I'm not saying this is the best setup. The main point is to avoid trading in the consolidation phases or when the market is completely flat. We need to avoid those. And once the market is in a certain direction, whether it's bullish or bearish, then you wait for the oscillator to confirm whether the market is bearish or bullish. So when both are bearish, look for entries only then. If the trend alert is bullish and the oscillator shows bearish, then avoid the market. Those days are just for traps. Those days are just for the big players to take your money. So if you like this video, please subscribe. Help me out. I'll be sharing more of the setups. Thank you.